Hello everyone. In this session, we're going to prepare one statement of cash flow for EMA Limited. This is one of the questions from BPP course book, activity 6. If you understand one question properly, you'll be able to do this cash flow statement in the exam. But all you have to do, you have to remember fee adjustment, and the cash flow statement is not very difficult. All you have to do, you have to remember the template and the adjustment and a little bit adjustment that will be given in the question. So you have to know how to adjust this figure with the tax, with the disposal, with the PPE, all of these things. All right, let's start with this question. It says EMA Limited statement of profit and loss for the year ended 31st December 2018. This is the statement of profit and loss account. We have to look at a few information for here. So the first thing we'll look at the profit before tax. So our question will be start with this one. With the indirect method, we'll start with profit before tax. So we need to remember with the profit before tax, it will be our first starting point. And after that, we have to do the adjustment for depreciation. Normally depreciation will be not in the question, it will be on the further information. So you need to look at that. Then we need to look at the finance cost. Finance cost is the interest cost. So this 8 will be, first we'll add it back because it is not the trading expense. And later on, we minus it again so that we can see this actual cash outflow, £8. Then after that, we'll do some adjustment for the dividend. If we receive the dividend, if you look at that dividend received, £45, we have to minus it from the profit before tax because the dividend received is not because of the trading. This dividend is received because we have invest somewhere and they give us the dividend. So this belongs to the investing activities, not in the operating activities. And after that, if we have any gain on disposal or loss on disposal, we have to make the adjustment. Gain on disposal, that means sale of non-current asset. Non-current asset don't represent the trading activities. For that reason, if we make a gain, we have to minus it. So 15 will be minus. And if we make a loss, we have to add it. And after that, we'll look for 3 more things. That is increase or decrease in receivables, increase and decrease of inventories, and increase and decrease of the trade payable. So that will be our main calculation for the operating activities. Anyway, let's have a look the question in full. So we have the financial statement. The financial statement will be always in 2 parts. Like for the 2 year, it will be the comparative figure 2018 and 2017. So they will give us both. Now, property, plant, equipment. So we have this one for 17, 18. So you can see like in 17, we have 514 and 18, we have 628. That means we buy some more property, plant and equipment, and we need to find the difference, how much you spend to buy the new one. That will be our cash outflow. At the same time, we have to consider, is there any asset we sold from the 2017? So is there any disposal we have from this asset? So you need to take it out. And the current asset, we have an inventories, trade receivables. We have to see is it increase or decrease compared to last year, and is it outflow or inflow. On the cash and cash equivalent, this will be our last item. So we'll start with this one, cash and cash equivalent at the beginning of the year. And after the adjustment, it should exactly match with the cash and cash equivalent at the end of the year, that is 7. And that's how we'll understand the cash flow is balanced or matched. The next thing we'll have on our financing activities. So here we have a share capital, and obviously financing activities represent the proceed of share capital. Now share capital and share premium normally do it together rather than do it 2 entity. We do 1. So we added share capital, share premium together. So it will be like, for example, 260. And then we minus from 250 plus 180. So that will give us the difference. How much is a new issue of the share capital? Then we look at the dividend paid. If there is any dividend paid, we take it here as well. The return earnings, remember that for the cash flow statement, return earnings we do not consider. Because of the return earning, there is no actual movement of the cash. So we have to ignore that because of the return earnings, no money going and no money coming. The bank loan, you can see the bank loan 2017 was 50 and 2018 is 80. And that means the bank loan has been increased by 30. That means money is in. So £30 you can see in to the business. So it will be inflow, and inflow it will be the positive figure. And if anything with the outflow, it will be negative figure. All right, then I think like after that we have to do some little workings with the property plant equipment, and we have the bank overdraft. You can see the opening balance, we have zero here. So cash and cash equivalent beginning of the year it is zero, but you have to consider the bank overdraft. So we'll take 14 as a minus because cash and cash equivalent is also part of the bank overdraft. Remember that. So you have to take this one 14 as a negative balance because at the beginning of the year we had a negative balance. That means we have to start with minus 14. Then we'll see how much we have at the end of the year, and that should be exactly 7, as I said, the closing balance. So if you have a bank overdraft, make sure you consider that because it is part of our cash and cash equivalent. And the next thing we have a trade payable. Trade payable, same thing. Is it increase or decrease? So you can see last year it was 121 and this year it is 136. So if the payable is increased, what does that mean? Payable increase means it is inflow. So that means before my liability is 121, now it is 136. So obviously it is increased by 15. So that means 15 is inflow. I'm not paying. If it is decreasing, for example, from 121, if it is 110, that means 11 I paid. So that's why it is decreasing. Payable means the liability or the outstanding balance to the credit supplier. Tax liability, we have to do little adjustment with the tax liability. Start with the opening balance plus current year. So from the profit and loss account and minus the closing over 57. And that will tell us exactly how much is tax paid during the year. So this one, we need to do little workings for that. And the tax paid will be minus from the profit and loss account to find it out how much is the net cash generated from operating activities. All right, so we'll do everything. And now, before we do that, just to read the information we have on the further information. So let's quickly read that. So we have the total depreciation charge for the year was 42,000. The total depreciation charge for the year was 42,000. So that means the depreciation is already given. Property, plant, and equipment costing 33,000 with an accumulated depreciation 13,000. So our cost was 33 and the depreciation is 13 and were sold during the year. So we sold it during the year. It's a little bit tricky. So we need to find the cost. Cost is 33,000 and the depreciation was already 13. So we need to find it out how much was the carrying value. Now 33 minus 13, that gives me 20. So 20,000 is the carrying value. Now if I sell more than the carrying value, I make a gain. If I sell less than the carrying value, I make a loss. Now I don't know how much I sold it for, so I need to do a little bit of workings. So I can see the question said I make a gain on disposal, that is 15. So my gain is 15. That means I have sold it plus 15,000. So I sold it for 35,000. Because if I sold it for 35,000, only that case I can make a profit of 15. So they give us the profit, but they didn't tell us how much you sold it for. So you have to find it out. So I know the cost was 33 and my depreciation was 13. So the asset carrying value remained 20,000. So from 20,000, if I make a profit 15, then I have to sell it for 35 at least. If I can sell it 35, then only I can make profit 15. So I need to add this to find how much I sold it for, because this is part of our investing activities on the property, plant, and equipment. This sort of adjustment you have to be a little bit used to, because otherwise it will take some time in the exam. So if you know how to do it, so it will be really fast. Dividend payment 24. So we pay dividend. This is the financing activities. So we pay dividend 24. Remember that dividend paid and dividend received is a different thing. And that's it. So now we're going to prepare our cash flow statement. We're going to prepare in the corner so that we can see the question and do it at the same time. So let's start. Let's start with our profit before tax. Profit before tax. Profit before tax, we have 87. We start with 87. Remember, you just need to learn the indirect method. You don't have to know the direct method because direct method will not be in the exam. So profit before tax, now we have to do the adjustment. Adjustment for the first thing we do for depreciation. Depreciation, the question tell us depreciation 42 on the additional information. I'm not taking the 30 because we put 30 in the top. Then the finance cost, this is the interest we have to add first, then later we will take it out again. So finance cost 8. Then dividend received, this one, it's not from the trading because we're looking for how much was the profit from operating or from the business, from the trading. So dividend received, that is 45. Take it out because this is not the income from the trading. Then we have a gain on disposal. This is from selling of non-current asset. It is not from the day-to-day trading, so you have to take it out, 15. And then after we have to see our 3 adjustment, that is the inventories, receivables, and payables. So if we go down and you look at inventories, payable, and receivables. So the first one, you do inventory. So in inventory, we can see it is actually increased 2010 to 2014. That means we buy more inventory. And if we buy more inventory, that means money is going, is cash outflow. So adjustment for inventories, that is 214 minus 210. That will give us 4. 4 will be outflow because if I buy more inventory, more cash is going. Then trade receivables also increase, same thing. Trade receivables also increase, 168. Last year it was 147. And that is also our outflow, 21. And trade payable, we can see this is also increase. So if the trade payable increase, that means I didn't pay it. Actually, I buy more. And for that reason, it will be our inflow. Remember that if the trade payable is decreased, that means we paid. For example, last year trade payable was 120 and this year is 110. That means I paid some money to my supplier. That time it will be outflow. But if it is more, that is inflow, like a bank loan. And that's it. After that, we have to find it out how much is the cash generated from operation. So cash generated from operation. And that will give us 67. And after that, we have to do 2 more things. One, the finance cost we have added, we have to take it out now. So finance cost. The first, we add it back because we want to show how much is the profit come from the business. Now we want to take it out because we know because of that money went out from the business. Finance cost and the tax paid. Tax paid. Now for the tax, we need to do a little bit workings. As I said, opening tax 44. That you have to find it out. How much was the opening tax? That is 44. So we do 44 plus tax for this year, current year, is from the profit and loss account. So let's look at the profit and loss account. How much is the tax for this year? That is 31. So we need to add 31. Add 31. And minus the closing. And the closing is 57. 57. That will tell us how much we paid during the year. So we paid 18 during the year. And tax base is also, if we pay the tax, money is going, so that will give us outflow. And that will tell us how much is the cash generated from the operating activities, and that is 41. So our one step is done. The first part is done for the operating activities. The next one, we need to do our investing activities. Investing activities. On the investing activities, we need to look for how much money have invested to buy the non-current asset, or is there any dividend received because of the investment. So first we start with the PPE, that is property, plant and equipment. So you can see here, we have an opening, property, plant, equipment, and the closing. So we said PPE, property, plant and equipment. At the beginning, we have 514. And we need to look at, is there any property, plant we sold during the year? So we need to see that, and also is there any depreciation we have. So you can see during the year we have a depreciation 42. We take it out, the depreciation 42, 42. And also need to see is there any asset that I have sold, but remember you only take the carrying value. So this was the cost, and we already used for 30,000. So the difference between these two is the carrying value, that is 20. This asset I sold, so you don't have it, so you have to minus that. And finally, you have to minus the closing balance. How much is the closing balance of the property, plant, equipment? And that will tell us how much exactly I buy during this year. And how much you buy, that means money is going for that asset. So closing 628 minus 628. That will tell us how much exactly we have paid to buy the new property, plant, equipment for this year. And then that I have one, so I have how much? 514 minus 42 minus 20 minus 628, and that will give us 176. 176. Also need to look at, is there any proceed or disposal of non-current asset? So proceed of PPE, that means is there any asset we have sold? So if the question said we sold, remember we said like we sold one asset, the carrying value was 20, and we sold it with a gain of 15. So that means we sold it for 35. The asset I sold, the carrying value, that means right now the value was 20 pound, and I sold it with the profit of 15. So 20 plus 15, I sold it for 35. The whole 35 will be investing activities. And finally, is if there is any dividend I receive because of the investment. So need to look at, is there any dividend I receive because of the investment? So if you look at the dividend received on the profit and loss account, that we did take it out, we have to record it here on the investing activities. So dividend received, and that is 45. And that's it. This is from our investing activities. So if we do that, so we have here 176 is a minus because we spend this one to buy the asset. 35 is inflow because we sold it. 45 is inflow because I received the dividend. That gives me 96. So you have number 1, 41. Remember that. That's from the operating activities. Now 96 from the investing activities, number 2. And finally, we do our financing activities. Financing activities, that's the last one. The finance activities, so look at the share capital. So, and share premium. As I said, we have added this together. It is increasing both. So 250 plus 180 minus 200 and 160. So let's try to do. That will give us 70. So share issue. If it is increased, that means I issue more share. That means more money coming to the business. So last year it was only 360. Now it is 250 plus 180. So I issue more share. That's why more money came to the business. So it will be inflow, money is coming. Then the bank loan, we can see the bank loan is also increased 50 to 80, so it is increased by 30. Bank loan 80 minus 50, last year it was 50, this year 80, that means 30 is came to the business. I took more loan, money is coming. And finally, I need to look at, is there any dividend I paid? So I can see we paid a dividend 24. That is financing activities, because people buy the share from my company and I have to pay them dividend. So dividend paid, and that is 24, and that's it. And that will give us 70 plus 30 minus 24, and that will give us 76. And this is number 3, financing activities, net cash generated from finance activities. Now we have to do all these 3. So 41, we have plus 96, minus 96, here it is minus, which is 176 minus, and then we have 35 plus 45 plus, so we still have minus on the investing. So 96 is a minus. So 41 from operating minus 96 from investing plus 76 from financing, and that will give us total 21. So we said 21, and this one is called net increase in cash and cash equivalent. Net increase in cash and cash equivalent. Net increase and cash equivalent. Net increase in cash and cash equivalent. Remember that net increase and cash and cash equivalent, it could be net decrease if it is minus. If this 21 come as a minus, then you have to say net decrease, but as it is a positive figure, we said net increase. Then we have to look at our financial statement, the opening balance. The opening balance, net cash and cash equivalent, we have a 0 here. We need to look at the bank overdraft, we have 14. Now I'll take the 14 as a minus, so opening cash and cash equivalent minus 14. Remember that if we have both, for example, we have an opening cash here 10, for example, and the overdraft at 14, so we take only 4, the difference, 4 minus, because overdraft is more than the cash. If it is 20 here, then we take 6 as a positive. So this one always have impact, remember that. Okay, and the difference will be closing and cash and cash equivalent. So 21 minus 14, it will give us 7. So that's my closing cash and cash equivalent. And this will be exactly need to match with our closing balance, cash and cash equivalent. If it is matched, that means all the calculation and adjustment we have done, that was accurate. If it is not matched, you need to double check why it is not matching. So you need to be very careful, like the cash opening and closing, it's always a link with the bank overdraft. So you need to make sure these two are linked for this year and these two are linked. All right, that's how we can complete our cash flow statement. If you practice few times, you'll be absolutely fine, because this question is not very difficult, and most likely this will be in the exam, and that will give you a lot of marks. So you need to make sure like you know how to prepare the cash flow statement. Only the way we can make yourself more ready, you practice the question from the book, and to practice 1 or 2 questions from the question bank, and also practice the question from the AAT website, and you'll be absolutely ready for your cash flow statement. Thank you very much for watching. If you have any question, feel free to email me.